Imagine spending $5 billion to buy a football club, and then celebrating because you only lost $50 million that year. Welcome to the strange economics of professional football, where trophies, prestige, and global influence often matter more than profits. To most fans, football is simple. 22 players, a ball, 90 minutes, a winner. But behind every packed stadium and dramatic title race sits one of the most fascinating businesses in the world. Modern professional football clubs are no longer just sports teams. They're global entertainment brands, media companies, merchandise businesses, real estate operators, content creators, sponsorship platforms, and in some cases political and cultural institutions. Today, elite clubs can be worth billions of dollars. Owners include billionaires, sovereign wealth funds, private equity firms, multinational corporations, and some of the wealthiest families on earth. Yet despite these staggering valuations, many clubs generate surprisingly little profit. Some even lose money year after year. So why do investors keep buying football clubs? Are they incredible businesses? Or are they luxury status symbols disguised as investments? Let's kick off. Football clubs are worth more than ever. Just a few decades ago, many professional football clubs were local institutions with relatively modest finances. Revenue mainly came from ticket sales, a few sponsorship deals, some merchandise, and limited television coverage. That world no longer exists. Today, football is a global industry worth hundreds of billions of dollars. Matches are broadcast worldwide. Social media connects clubs directly with hundreds of millions of fans. Sponsors compete for visibility. Streaming platforms bid for content. Merchandise reaches nearly every country. As football became global, club valuations exploded. What was once a local sports organization became an international media asset, the biggest revenue source, broadcasting rights. The most important financial transformation in football came from television. Broadcasters realized that live sports attract massive audiences, and audiences attract advertisers. As competition among broadcasters intensified, television rights became increasingly valuable. Domestic leagues negotiate multi-billion-dollar broadcasting contracts. International rights generate additional income. Top clubs benefit enormously from these agreements. For many teams, television revenue has become the single largest source of income. A club doesn't need every seat filled to make money anymore. Millions of viewers watching from home can be even more valuable. Matchday revenue still matters. Even in the streaming age, stadiums remain important. Ticket sales, VIP hospitality, corporate boxes, food and beverage sales, parking, premium experiences. Every home match creates a significant revenue opportunity. The biggest clubs often earn millions of dollars from a single game. Luxury hospitality has become particularly important. Corporate clients are willing to pay premium prices for exclusive access, networking opportunities, and entertainment. A sold-out stadium isn't just a sporting success, it's a business success. Sponsorship deals keep getting bigger. Look at a modern football jersey. The front, the sleeves, the training kit, the stadium signage, the interview backdrop. Almost every visible surface has commercial value. Global brands pay enormous sums for access to football audiences. Airlines, banks, technology companies, sportswear brands, automotive manufacturers, telecommunications firms, betting companies in some jurisdictions. For elite clubs, sponsorship income can reach hundreds of millions of dollars annually. Sponsors aren't buying logos, they're buying attention. And football delivers attention at an extraordinary scale. Star players are economic assets. Football fans often focus on transfer fees. A club spends $100 million on a player, and headlines explode. But elite players are more than athletes. They're economic assets. A superstar can increase ticket demand, merchandise sales, sponsorship value, social media engagement, global visibility, commercial partnerships. The right signing can generate revenue far beyond what appears on the balance sheet. This is why clubs sometimes pay extraordinary transfer fees and salaries. They're investing in both performance and marketing. Why wages consume so much money? Here's one of football's biggest financial realities. Player salaries are enormous. Top players earn millions annually. Elite clubs maintain large squads. Coaching staff continues expanding. Medical teams, analysts, recruitment departments, performance specialists all require funding. As revenues grow, player wages often grow alongside them. This is one reason many football clubs struggle to achieve consistent profitability despite generating huge revenues. The talent competition is relentless. Transfer fees are a unique economic system. Few industries resemble football's transfer market. Clubs buy and sell player registrations. Young talent may be developed internally and sold for significant profits. Established stars command extraordinary fees. Transfers create a secondary economy layered on top of the sport itself. For some clubs, player trading becomes an important business strategy. Develop talent, increase value, sell strategically, reinvest. This approach has helped many smaller clubs remain financially competitive. Stadium ownership changes everything. Not every club owns its stadium. Those who do often enjoy significant advantages. Concerts, corporate events, conferences, tours, museums, retail stores. Restaurants. A modern stadium can generate revenue throughout the year, not just on match days. Owners increasingly view stadiums as entertainment complexes rather than simple sporting venues. The more frequently the venue operates, the more valuable it becomes. Why billionaires buy football clubs? If profitability is uncertain, why do wealthy investors keep buying teams? Because football ownership offers benefits beyond financial returns. Prestige, influence, global recognition, business networking, political visibility, cultural relevance. Owning a major football club can elevate someone's profile faster than many traditional investments. For some owners, the club becomes part of their identity. The emotional return may matter as much as the financial return. Some owners treat clubs like businesses. Not every owner views football as a passion project. Many modern investors focus heavily on profitability, improving operations, expanding commercial partnerships, developing digital products, growing international fan bases, enhancing stadium revenue, reducing inefficiencies. Private equity firms, in particular, increasingly analyze clubs through a business lens. They see underutilized brands with global growth potential. Why valuations keep rising? Football clubs are often valued at figures that seem disconnected from profits. Why? Because investors aren't just buying current earnings. They're buying future potential. Global audiences continue growing. Broadcasting markets continue expanding. Digital engagement keeps increasing. Sponsorship opportunities multiply. Scarcity also matters. There are only so many elite clubs in the world, and opportunities to buy them are rare. Scarcity drives value. Why winning doesn't always mean profitability. This may be the most surprising part of football economics. Winning trophies doesn't automatically create profits. In fact, chasing success often increases costs. Higher wages, larger transfer budgets, performance bonuses, expanded staffing. Many clubs prioritize sporting achievement over maximizing earnings. Owners often accept lower profits or even losses in exchange for competitiveness. In football, prestige frequently outweighs profitability. The real value: global brand power. The world's largest clubs possess something incredibly valuable: global emotional loyalty. Fans don't simply consume football, they identify with clubs. They pass support down through generations. They buy products, attend matches, watch content, defend the brand. Few businesses enjoy that level of customer attachment. This loyalty creates economic value that extends far beyond traditional financial metrics. It's one reason investors remain interested despite the industry's challenges. The bigger lesson: professional football reveals an important truth about modern economics. Some assets derive value not from what they earn today, but from the communities they create. Football clubs combine entertainment, culture, media, identity, and business into a single organization. Their value comes from attention, passion, scarcity, history, and emotional connection. Those factors are difficult to quantify, but they are incredibly powerful. Final thoughts. Owning a professional football club is unlike owning almost any other business. The revenues can be enormous. Broadcasting deals generate billions. Sponsors compete for exposure. Merchandise sells worldwide. Stadiums create year-round opportunities. Yet profitability often remains elusive because competition constantly pushes spending higher. That's why football clubs exist in a unique space between business and passion. For some owners, they're luxury hobbies. For others, they're strategic investments. For many, they're both. The next time you watch a packed stadium erupt after a last-minute goal, remember this: behind the emotion lies a complex global business worth billions of dollars. And while trophies may fill the cabinet, the real game off the pitch is understanding how one of the world's most beloved sports became one of its most valuable industries. If you enjoyed this breakdown, like the video, subscribe to the channel, and drop a comment below telling us which billion-dollar asset, sports franchise, or hidden economic system you'd like us to explore next. Thanks for watching, and we'll see you in the next one.